They're going to change the map. They're going to change the map.
Yeah, it's had a huge impact on our community. When you look
Sure.
at like Claiborne Elementary and the growth that that school system has seen, you can draw a straight line to rural development
Yeah.
because the vast majority of Claiborne Elementary,
Yeah, there's only a very, very small portion of it that's not in RD.
correct. And so these families who have elementary age school kids are able to get 100% financing in a really good school zone, and that's caused that population of the school to grow.
Yeah. So, Justin, do you think that the rural development map has caused any type of influence on housing prices?
It's a fact, and you can see it clearly if you're really paying attention. You can have two like homes, one that's in rural development, one that's not. You're gonna generally get a premium in the RD category because of the fact that you don't have to have a down payment, and therefore people are willing to pay a little more to be able to keep money in their pocket.
Okay, that's really good to know. And so this affects not just the buyer. Someone's looking and needs a zero down payment loan. If you're selling a home,
Mm-hmm.
you should know if your home is in one of these areas,
Right.
this area for RD, and it can be marketed as such. If
Yeah.
if we're talking, you can demand a premium versus someone that's not in RD, then as a seller, you need to know this thing.
Yeah, and a good way to check is the USDA property eligibility map. Just put that in Google, USDA property eligibility map. It'll pull up. You hit accept on their, conditions.
You just
And
type your address in.
type the address in, and it's going to do a drop in, and it's going to tell you is it eligible and is it not. And that's what the lender uses to decide. There are rare scenarios where it's actually on the line,
Right.
and that can come up at some point, but that almost never happens. It'll tell you if it's eligible or not.
Yeah, it's a definite line, and it's fairly easy to tell in almost every case.
Yeah.
So it should be easy to tell just by dropping your address in. But if you live out in Calhoun, Sterlington, Swartz, like you're in an RD area.
Here's what's cool. If you're in Union Parish, Morehouse Parish, Richland Parish, Caldwell Parish, or Jackson Parish,
All of it.
there's not an area that's not
Right.
qualified.
And in
from the
Lincoln
location.
Parish, it's
The vast majority.
yeah. I mean, it's just
Right around
Ruston
the college,
proper.
yeah, and north.
yeah. So most of our area is actually in RD.
Well, the cool thing is you do not have to be a first-time home buyer to get a rural development loan.
Okay, well, let's jump into that. So what does one have to do to qualify for a rule? This is a government-backed loan, so there are standards in.
Yeah, and so qualify. These are just rules that mean that if you don't meet them, then you're likely not going to have access to pre-approval or loan approval. Okay. These are not the only things to qualify, but these are things that you have to meet the mark for a USDA rural development RD loan. Okay. Number one, the property's got to be in an approved location, but it is also an income restricted and an asset restricted loan. Okay. Meaning that the idea behind rural development is, hey, you make enough money to make your mortgage payment every month, and all of that's great, but you don't make enough giving the cost of living to save a down payment. Okay, and they use the household size to determine that.
Okay.
And I want to repeat that household size. This
So the
doesn't
number of people in the household.
actual people living in the household. It doesn't define what does it mean for someone to live in the household. It doesn't say you have to be married or it's your kids. If your grandmother lives with you, if you have a partner, if you have a roommate, all of that income factors into the max household income.
Okay.
That makes sense? Even if you have a kid that's 17 working at McDonald's, their income factors into the max household income.
Okay.
Okay. And, thankfully those numbers have gone up. I think it's roughly over, if you're 1 to 4 families, it's roughly over 100,000. If you're 5 people in the household and up, it's like over 130 now. And so it's a number that serves our community well
Yes.
in terms of who can qualify for it.
Okay. Are there other qualification issues? maybe a credit score.
Yeah. So minimum credit score varies from lender to lender,
Okay.
but I hate to put this on camera, but it's really, you really can go down to 580. Okay.
Okay.
A lot of people don't know that. You'll hear many lenders say it's 640, 620, 600, but really
Well,
you can go down to
so
580.
well, I'll speak on Justin. If 580 is what the government has set as the, and some lenders will put their own stipulations on top of that just as a safeguard
It's a bank
for them.
policy. Yeah.
Bank policy. So yeah, it may vary, but 580 is the bare bottom with anyone. So, and that covers a lot of our community. I mean, if you make less than 100,000 with a 580 credit score or higher, there's at least the potential that you could qualify for this particular loan.
Yeah. The door's open for you to have a chance to walk through. Yeah.
Yes, and there's a lot of homes that would fall into this category.
One other thing, you cannot own another home.
Okay, so you can't have a second home, can't have a lake house kind of thing. What about, and this is a question that I as a realtor get asked a lot, and I always just tell them, call their lender, but they needed help with the down payment. So we're looking at a 0 down payment loan.
Right.
What about closing costs? Can those be included in the loan?
Yeah, so this is another area where rural development really serves the borrower well. So you can roll closing costs into the loan,
Okay.
but it must be via the purchase agreement through seller concessions, meaning that the seller concedes money at closing to cover the cost. So, so that's a way to do it. Now, if the house appraises above the sales price, then you can actually lend above the sales price to cover closing costs.
Okay.
So you can, it's one of the loans where you can actually lend above the sales price to the appraised value and roll in additional cost.
Okay. And another question that we as realtors ask a lot of our lenders, because we forget all the time, is how much can we ask for from the seller in closing costs?
Yeah, it varies from loan type, but
Yes.
for rural development, it's 6% of the sales price.
And that should be sufficient to cover most closing costs in most situations.
Yeah.
Now, if we're talking about a $50,000 home,
stuff.
it's probably not going to be sufficient. But in our average home values or getting closer to average, it's more than sufficient.
It is more than sufficient. Yep.
Yes. All right. Is there anything else, Justin, that as far as rural development that you think is pertinent to our conversation?
Yeah, generally speaking, the property needs to be move-in ready.
Yes.
Yeah, if you're trying to buy that rural development fixer-upper, you probably got to rethink your strategy, because
And that's going to also apply to FHA.
this is so government insured loans. So let's just kind of have a real talk for a second. It's a risk management situation. Okay, so these loans are being done because the lender's willing to do them because the USDA office has come in and said, hey, we'll insure the risk of this loan. Like, we believe in this community and we believe in these borrowers, and we're gonna help cover some of that risk of the loan. So if you'll loan 100%, we'll cover that risk. Well, in that, what they're saying is we want people to buy a house that doesn't need immediate repair, because if you move in and then on day 45 you got to replace the central heat and air, guess what? You're probably not going to make if you didn't have savings. You're not going to make your first payment.
Yep.
And so they want the house to be move-in ready to protect the borrower from default and protect the loan from going into the default, because they have all these expenses to get the house fixed up. And there's no equity at the point of purchase, potentially, for them to be able to recoup their losses if the property needs to be foreclosed on, or even if the buyer goes, hey, well, I've got to sell it because I can't afford to repair it. You know, they need to make sure that they're protected there. So that's one of the reasons why that's the case.
Yes. And we've said this, but not in these words, but this loan type is for owner-occupied properties.
Yes.
It's not, you cannot go and rent this home out. It's not for any other, a true mortgage that you are going to live in. That's what this is for.
Your primary residence, for sure, and you can only own one primary residence at a time.
Okay. All right. Well,
good
that's rural development in a really tight nutshell.
Yeah.
I'm really, really happy that there's no way we did that in that time.
stuff.
I'm really shocked.
Yeah. Well,
So
this
let's
is
start comparing that to the other government loan that a lot of people look to. And this particular loan is talked about. You have TikTok,
mm,
you're hearing people all the time, hey, do an FHA, do an FHA, 3.5% down, 3.5% down, FHA. You can buy a quadplex and
yeah,
live in one and rent out the others. And
tis true.
it all is true, but there's some, we need to know what's the need to know on an FHA loan,
Yeah, I
and
want to.
especially compared to the rural development.
Yeah, I want to start out with gratitude. Like I'm really grateful for the FHA loan. That's how I got my first house with an FHA loan. So if you hear me say anything that might be considered negative, just know that I'm not being negative. I'm just being truthful about the product itself, and it has served our country and our borrowing and home ownership community really well and continues to do so. Okay, so FHA in an advertising sense is a trigger word. Okay, it is used to capture people and pull them in and get them into a funnel to try to get them some type of product. Okay, people still, with all the information that's being thrown out there, still misunderstand it. And oddly enough, it has to do with the letters.
Okay.
FHA, first time home buyer.
No.
That doesn't work, does it?
Federal.
Federal housing.
And so it has, the first word tells you all you need to know.
It is not. It is not a home that. It's not a loan that's only for first-time home buyers.
Right.
In fact, you could be buying your 100th home. In fact, you can own another home when you use an FHA loan.
Okay.
It is not a first-time home buyer loan, but it is architected and built in such a way that often it is the best loan for first-time home buyers.
Okay.
Does that make sense?
Yes.
And so when you come in and you tell your lender, hey, I want a low to no down payment option, but I want to live in the city limits.
Yeah.
Well, then rural development's out the door, and unless the bank has some other proprietary product, you're immediately shifting to FHA and one other loan. We'll get to that later, but you're looking at FHA, especially when you're dealing with kind of lower credit scores.
Okay.
Okay, and we could define what that means later, but it allows for a 3.5% down payment. It allows for it's the loan that has the highest debt to income that's allowed
Okay.
in like a specific debt to
Well,
income.
let's just
sample.
real quickly, just in case there's someone not
Mhm.
following. You put all your debts
Yep.
over how much you make, and that ratio is looked at on every loan
Yeah.
that I know of. Anyway.
Every loan.
Every loan. And so that ratio is a big part of being able to qualify for most loans.
Yeah. If you're buying your first home, you haven't arrived in your income, making years more than likely.
Right.
But you picked up a couple of things of debt, a couple of student loans, a couple of cars, and some furniture, and bam, like you got debt, right? And so FHA it has more room to understand that, and again, that risk is being insured from the government through the Federal Housing Administration, and it allows the lender to have the confidence to make the loan, okay, without requiring a 20% down payment.
Okay. Well, let me ask a question, Justin. Let's say there is a house that is in rural development. Someone's interested, and someone comes to you and says, I need a low to no down payment option, and rural development is on the table for this person and FHA. Let's compare the two
Yeah.
and try to make a decision. And obviously, we don't
Yeah.
have a real person in front of
We
us.
don't, and I can tell you that one of the things that's incredible about real estate is no two borrowers are alike. Every scenario is like a fingerprint
Sure.
that you have to work through. But right off the bat, we're looking at debt to income. USDA rural development allows for 41%, generally speaking, as their max DTI,
Okay.
debt to income. But their housing ratio, meaning how much of the mortgage can eat up that debt, is 29%. Okay, so that can really shrink your budget very quickly. Okay,
Sure.
FHA goes to 56%, generally speaking, and the housing ratio can be over 29. There's a lot of other factors in it, and it's not black and white. It looks at the global look at the client, the borrower. But my point is, it allows for a higher budget. And so when you're comparing whether or not they should use a USDA rural development loan, you're wondering if they can buy more house with FHA.
Okay, that's good to know. They may be able to actually afford the home with an FHA. What are the terms typically comparatively between those two loan types?
Yeah, so no down payment, 3.5%. So you got a down payment with FHA. There's a funding fee that's rolled into the loan. I call it hidden costs. You don't feel it the day of closing, but it is in your loan amount. It impacts your equity position. You're borrowing 101% for a USDA. Your base loan amount for FHA is 96.5, but then a 1.75%, so almost double the USDA. Funding fee is rolled into the base loan amount. So you're really actually, going to have just a little over 1% equity at the time of closing for a USDA rural development loan. I mean, for the FHA loan.
For the FHA, the USDA, you're going in with negative equity.
If the house appraises for the sales price, that is correct.
Right. Which is common.
Common, very common.
Okay, so
There's one other thing.
go for it.
The monthly mortgage insurance. We call it PMI. It's really not called that on
MIP, MIP.
MIP. And we just use PMI because that's what the customer understands, but
Right.
for government loans, MIP. It's 0.35 for USDA, 0.85 for FHA.
Okay.
So for the same sales price, even though you're putting more down on FHA, you're going to have a higher monthly payment.
Because of that PMI.
And the funding fee.
And the funding fee. So those two, and we can have another episode about mortgage insurance, but are they able to roll off in either one of those loans?
Only on the FHA. Man, we're getting deep this morning.
Yeah.
So if you put if you put greater than 3.5% down, if you put more than 3.5 on FHA, you have the option for it to roll off around year 10 or 11, and that cannot be sped up.
Okay. So even if you drop below,
You can be at 50%, but if it's still inside those years, it's not going to fall off.
but rural development is there forever.
Correct.
Okay. So that's something to think about at some point in your amortization schedule.
Yeah, giving many factors, those are loans that people generally want to refinance if they're going to stay in the home long term, meaning greater than 3 to 5 years.
Okay. What about the big thing people think about is interest rate?
Yeah.
Are they compared?
Very comparable.
Okay. All right.
Again, that differs from lender to lender, and so I hate to paint with broad brush strokes, but generally they're pretty comparable.
Right. But the products themselves offer very similar rates.
Yeah.
All right. So FHA.
Yeah, let me say it very succinctly. Rate is normally not the reason why you go to one or the other.
Yes. I think when Justin started his conversation with we're looking at debt to income and how much you can afford and all that, I think that kind of covered that.
Yeah.
So why would we choose one over the other necessarily? I mean, if we're going to be paying the same and I got to come up with money for an FHA loan, is the only reason location?
Primarily location. There's maybe some rare scenarios where someone comes in and says, hey, I really don't have a down payment, but I got to move, and I know I'm going to move again in 2 years. And you start trying to figure out like what's going to create the most equity when they get ready to sell.
Yep.
Because they're going to have to deal with that pain point of, borrowing almost to the sales price, but needing to have enough equity to be able to move the property later.
One thing that we misunderstand as realtors, and we'll have investors from time to time and say, I'm going to buy this house with an FHA loan and move into it for, is there a certain amount of time that someone would have to be in the home before they would be able to sell it?
What we say is, hey, do you truly intend to live there? Is it truly going to be your primary residence? Do you consider this kind of your permanent residence for the foreseeable future? Meaning, you don't already know that you're going to move out in 3 months.
Right.
We can't really set a time limit on it, like it has to be. There is time frame that you have to move in, like you have to move into your house within a certain period of time on loans. You can't leave it vacant. But no, we can't say 1 year, 2 year, 3 year, 5 years. There's not a time frame that we can give on it. Just know that it is mortgage fraud to not disclose your true intent with the property, and your intent must be for these loans to primarily reside there.
Yes. So are there any, on either of these loans, is there like, can I go buy $1 million home with?
No. So rural development does not have a max sales price,
Okay.
but because it has a max income, it creates its own ceiling.
Right.
Okay. And of course, debt to income factors in there. I mean, I have personally done well over $300,000 loans in Frenchman's Bend with a no down payment USDA rural development.
There you go. Good
Okay.
for them.
It normally shocks people when we're doing it. I'm like, no, hey, calm down. We actually can do it. It actually works. FHA, I can't remember their max. I think it's oh gosh, it's gotten up there pretty high, like $356,000.
Yep.
But yes, FHA has a max.
Okay. All right. Before we move into the top five, Justin, is there any other words? We're going to continue this
Yeah,
next
it's gonna
week
be a
with other loan types, and I believe we'll probably talk about conventional loans and maybe dip
Yeah.
our toe into VAs or some other product. So
What I would really want the listener to hear right now is you heard a lot of information this morning, and maybe you walked away feeling like, well, I know what I need to do. And I would say I would caution you to that you know what you need to do. My advice would be to sit down with your lender, someone that you trust, and have them look at your scenario, understand what it is that you want to accomplish before you make that final decision of which one it is. Now, people show up all the time with different pain points, and when the pain point is, there's just no way I have a down payment. Justin, if you're going to give me a loan and I'm going to buy a home, it's going to be 100% financed. Well, that makes the decision for you to some degree, and either it works or it doesn't. But overall, you want to sit down with your lender, be open-minded about what is going to be your best option moving forward.
good words of wisdom there, Justin. And I would just say it is possible for someone to come in and buy a home with no cash, but completely no cash is not as common as one might be led to believe looking at everything.
There's cost even to even before the purchase. Even if the lender is willing to cover or architect the loan in such a way that there's no cost due at closing,
Right.
there's still costs prior to there if you're going to
Yes.
be able to, if you're going to walk through the purchase in a healthy way.
Yes.
And, you know, we like to tell people to be prepared to have at least $1,500, $2,000 stuck back.
I mean, just from a realtor's side, I mean, you're probably going to have to pay for the appraisal, and you better get a home
Yeah.
inspection. So, I mean, at least several $100s for all of that.
You're $800 to $900 right there.
Yes, absolutely. So, it's not a myth that there's zero down, zero money, no cash in the bank kind of buy a house.
Yeah.
It's not necessarily a myth, but with actually no dollars being spent is a lot more rare than not. So, anyway, Justin, thank you for
No.
bestowing your wisdom on us.
Thanks for asking the
And,
questions.
we're going to move to the top five this morning.
Let's do it.
All right. Well, Ruston has dominated yet again.
2 weeks in a row.
Man.
Come on.
Well, number 5 shows up in Ruston, and Robin Brown, the listing agent, is in here twice.
Robin, killing it.
Yes. $404,000 on Knowles Drive.
Knowles Drive. That's a Ruston street if I ever heard it.
Right, and it's a beautiful home. Like, it's a stately home. I mean, it's a nice house. But it was a couple of these I'm going to point out. This was 65 days on the market. Original list price $425,000. They had already dropped it to $412,000, and it sold for $404,000.
Oh man, we
And
might
so,
be seeing a little bit of a shift.
So yes, I'm going to say a couple of more things about that particular scenario, but that's a nice home, Robin. Congratulations. Number 2 has 26-foot ceilings through a large portion of the home.
Wow. Wow.
So Toulouse, it's
Yeah.
over in Monroe, sold for $440,000.
Wow.
It's a really nice home, and I will say that this is actually one of my, well, the listing agent was Mark Sisk.
Cool. Good job, Mark.
Yeah, great job, Mark. The selling, the buyer's agent was one of my fellow Coldwell banker,
Who was that?
Carla Wollison.
Oh, Miss Carla.
And Well, I will say, whoever bought that home, you need to utilize the Coldwell Banker handyman service to change the light bulbs in that 26-foot ceiling. For the next year, you can have somebody come and climb up there without harming yourself. So
Man.
please do that. 26, 440. So this home originally listed at $499,000.
$59,000 price
They had already dropped it to 449,
drop. Mm-hmm.
and it sold for 440.
And how many days on the market?
98 days on the market.
Man, I'm hearing realtors, you better be nimble out there.
So you're fixing to see it,
Mm-hmm.
not this one on our number 2, but number 3, a little more, only 33 days
Okay.
on the market. It's out in Indian Lakes,
I know
Comanche
this
Trail.
house, my friend.
Oh, do you now?
I got a story with this house.
Oh, no.
Yeah. So,
Is it
no,
Shareable?
it is. It's shareable. I won't share like names, but I mean, I'll share the public record aspects of it. But I sold this house as a realtor,
Oh, well, good for you.
and I sold it before it ever hit the market. Dual agent.
Did it have the swimming pool then?
It did not have the swimming pool.
It's got a new swimming pool, jacuzzi.
It had a big, nice sloping yard with a deck that was probably pretty close to decaying to some degree.
Well,
at the
they
time.
built this nice deck all the way around this pool, and it's a nice backyard now.
Oh, it's got a beautiful view of the lake. If you walk back there, you can kind of see. I mean, well, it's just beautiful.
It's got the trees right close to the edge of the water. It actually is really nice. This original list price, $475.
Okay.
They had already dropped it to $469, and it sold for $445. But it was only on the market for 33 days.
They moved quickly.
Yes. So Liz Hammett, listing agent on this.
Love me some Liz.
I think her her sellers understood what's going on in the market, and that's what I would like us to see in this number 2.
All right, just so you know, the original sales price when I sold it was $350.
Well, there you go. Well,
But that was back. That would have been back in like 2000.
so almost
11.
$100,000 more.
Yeah.
So, all right. Bobby Dyer had this listed in
Back in
Ruston,
Ruston, yeah.
Audubon Drive. Sold for $460,000. This is
Okay.
number 2 on the list. Original list price $575,000.
Over $100,000 price
They had already dropped it to $490, and it sold for $460.
drop.
256 days on the market. If you go back, we're talking toward the end of last year. Market was on fire,
Yeah.
and I would venture to guess that this particular seller just didn't think that they
Yeah.
needed to drop.
Well, what's probably interesting is if you go back to January, February, and the difference in rate from there to now, what you're really looking at is how much buying power has been lost.
Yeah, and
Meaning
a
that
lot
these-
of this is in buying power.
Meaning that the same sales price bought this
Sure.
earlier in the year, and now it buys this.
Yes. So I've been telling my clients, like, we're going to get immediate feedback in this market. And it will be by how many people are coming through and how many offers are we getting.
Yeah, listen to your realtors.
If you don't get an offer fairly quickly on a nice home, that is market feedback.
Yeah,
And so
especially in these higher price ranges.
there's not as many homes. We need more homes in this price range. And if your home is sitting on the market for 90 days,
Yeah.
200 days, you either don't want to sell your home or you just are not understanding what's going on and you need to make a move.
Yeah.
And I think Liz did a really good job. Whoever that seller was, she did you well, leading you down that direction.
That's awesome.
All right. Well, we already called Robin's name, but Robin Brown sold number 1. Yes. I love that song. Number 1. This one is the only one on the list that sold for above asking price, $560,000. And I don't even know how to say
The Lane Fair.
Yeah, the Lane Fair. Okay.
Yeah, it's a nice cozy road if you've ever been down there.
Sure. I mean, mature trees, like it's
Quintessential Ruston.
yeah, no, it's really is nice, and
You got a nap?
I got it, spat it. But this house only stayed on the market 26 days.
Wow. What do you think was so attractive about this house?
I don't know, 1.3 acre. I assume someone was looking for the neighborhood.
Neighborhood.
Like, and
I didn't look at the interiors. Is this a contemporary style on the inside?
no,
Okay.
no, it's got a lot of wood. It's traditional. I mean, it's been updated. It's not in its original state from 1986 when it was built, but it's not completely updated. I mean, it's got solid wood paneling in some of the areas.
I mean, kudos to Robin. I mean, if we had a realtor of the week, it'd be her. She's on the
Well,
list
yeah,
twice.
she killed it.
And of all the other top fives, they all made price drops, and she got above asking and got the number one spot.
But she got immediate feedback.
Yeah.
I mean, it's hard to close in 26 days most of the time, especially on a home this, and I assume, yeah, it was conventional loan, so it wasn't cash. To get that done in that amount of time, like it was probably immediately within those first few days of being on the market. So she got immediate feedback from the market, and it was positive.
We need to have an episode about marketing time. That has just changed so dramatically over the last few years.
Sure.
We need to help make sure people understand it.
Yeah, no, great job, Robin, and I'm glad for whoever bought it. They had a nice home.
Awesome.
So all of these people got a nice home, whoever bought these top five. And there was a lot of homes sold in Northeast Louisiana. A lot more will be sold, and we'll be back to talk about more of them at some point.
Back next week.
Absolutely.
Tuesday, 8 o'clock. This has been another episode of Local Wisdom. If you have any real estate needs, James Douglas,
Give me a call.
extraordinaire with Coldwell Banker. I'm Justin Underwood. I'm your local mortgage lender. Would be happy to help you. If you have any questions about USDA rural development loans, FHA, or anything like that, be sure to shoot us a message, and we'll answer them as best as we can. But as always, I hope you have a marvelous day.
See you next week.